Good morning and welcome to this weekly market update from MRC Markets. Today is the 17th of September 2012. What I'm going to be doing today is going through charts on Euro dollar, cable, dollar Swiss, dollar yen and gold. Just trying to give some sort of weekly outlook into the markets. We'll also have a little look at what happened last week. Won't make any trade calls recommendations today. You trade at your own risk. If you could please read our full disclaimer on our website www.mrcmarkets.com. If any news follows, we have 3 moving averages on each of these charts. The red one is a 55 simple, purple is 100 simple moving average, and the gold is a 200 simple moving average. Okay then, let's have a look at the euro dollar. Just for a quick bit of perspective, we spoke about this last week. Just to remind you, this is the monthly chart, so it's an extremely long-term chart which we're going to very briefly look at. As you can see, so I've drawn a fib from the lows to the highs here. If you zoom in, we've had these 2 clear bounces, one there and one there, and also this 200-month moving average. But the key level is the one spot 21.31. That's where we've got this clear bounce up. Now, this is from a long-term cycle perspective. We're technically in a bullish fib setup, and you can see last week's candle responded to it quite nicely. Because the previous week it pierced below, bounced off the 200-month, and also this key fib setup, which was also previous support. And last week's candle followed up, and you can no, sorry, not last week, last month's candle followed up. You can see this month we are starting to rip towards the upside with that 100-month moving average being that key resistance up there at one spot 33.90. That's still a long way off. But yeah, I just thought I'd show that just to recap in terms of the really long-term perspective. Okay, so let's have a quick look at the weekly. Last week's weekly candle very bullish, which continued from the previous 4 weeks green candles. We've now had 5 bullish green weekly candlesticks, and I think that's quite significant because if you look back through the past, if you tend to get 4 candlesticks in a row, I mean that's quite a lot. You do tend to then get the odds are in the favour of some sort of retracement. I mean, if you look back over here to your left, we had 5 and then a big red one there. If you look just previously here, we had 1, 2, 3, 4, 5 as well, and then a slight retracement. So I mean, if you get into the 4 or 5 consecutive candles in the same direction, then the odds are for some sort of retracement, in my opinion. It doesn't have to be a massive retracement, it could just be a little one. And the odds are here, in my opinion, on this weekly chart this week, if I was to predict what candle is going to be, you could say that what I would kind of predict if I got some sort of crystal ball, I'd say that we'll get a sell-off maybe in the first few days, and then we could bounce to this 55-week moving average, because we've now had a weekly candlestick close above it, which is quite significant for me. And the odds are that we are going to come up and test this 100-week moving average. So if we do get any sell-off this first few days, then keep an eye out on that 55-week moving average, as that could be a key support level on that chart. But in terms of the longer overall picture, you now say that the next key resistance on this weekly chart is this 100-week moving average. That'll be interesting to keep an eye out on that weekly chart. We'll definitely be looking at that every week. Okay, let's flip to the daily chart. If we zoom out a bit, you can now see in this daily we really are ripping towards the upside. It's a very aggressive move up. We had that trendline resistance. I think we drew that on last week. Trendline resistance we've firmly broken out of that now, and we're now above this 200-day moving average. So especially last week we had the Fed announcing a new quantitative easing program. So that's why we're having this aggressive weak dollar move, and a lot of people have said that it was already priced in. That's why we have been ripping towards the upside over the last last few weeks and months. So now that the news has come out, are we going to get some sort of sell-off? Was it a kind of buy the rumour, sell the news thing? So that'll definitely be interesting in terms of the fundamentals. Not that we speak about fundamentals too much on here, We're not to keep it to the technicals, but that's the fundamentals argument. Then we could start to see our sell-off. So if we do get a sell-off, and the first sort of key buying opportunity, in my opinion, would be this 200-day moving average, which is starting to flatten out now, and that comes in at one spot 28.07. But that's, I mean, this is still a longer term chart. So if we're looking, let's flip it to a shorter term chart. We've got this 4-hour chart here, which we've been focusing on. We had this very nice trendline support here, which was holding, and we've now had a very aggressive bounce off this trendline support. And you could say, if you flip it to the 1 hour, that we've now got a new trendline support on this 1 hour here. This is also coinciding with the 55 bar moving average. So any aggressive buyers still out there who are looking to buy the dip will most probably be looking off of this 1 hour trendline support, which also coincides with 55 bar moving average. So that'll be very key to see. And also the aggressive buyers will most probably be looking from this fib, from the spike low here to the high. The 50% there comes in at one spot 30.16. But no, I mean, the euro dollar chart is always very technical, and it has been very technical indeed. But that's what I'd really keep it focused on at the minute. As I mean, since we've got our weekly levels there, the daily. I mean, the daily really isn't too interesting now, apart from the 200-day moving average. If we do come down to there, we'll have that level. In the 4 hour, we've got 2 trendline supports there. The big one, obviously, to keep it more in focus, but aggressive buyers will most probably be attempting to buy off that. But if we do break that trendline support, then we've got that big one down here, which is the one that I'm really focusing on. Then the 1 hour chart is very technical in my opinion, so lots to have a look at there on the euro dollar. Let's flip it now to the cable weekly. Same picture. I really should just leave this on this chart. This key trendline support there, and the trendline resistance there is still in play. This triangular formation that we've been speaking about all year, really. But very similar to euro. We've now had 6 weekly candle, 6 green candles in a row on this weekly chart. So I mean, still, in my opinion, the odds are for some sort of retracement. But I mean, by no means it could easily rip up this week and break this trendline resistance. But I mean, very, very similar sort of weekly chart there in terms of the candlestick pattern formations. We said it previously. It's all about these moving averages here. We've now clearly broken above them now, so there's no real limit on this weekly chart apart from that trendline resistance, in my opinion. In terms of the daily, let's just type this up a bit. In terms of the daily, very similar to euro again. Although actually another thing we're keeping out is this resistance level over here on the left. The key resistance on the daily and weekly will be this one spot 62.76 level there. If you do get any bounce up, then keep an eye on that. But I mean, I still think especially for this week, the odds are, in my opinion, some sort of healthy sort of retracement. And then if we do get any sort of healthy retracement, keep an eye on that 200-day moving average. If you flip it to the shorter term charts, like the 4 hour or 1 hour, very similar to euro. We've obviously got this trendline support here, the bigger trendline support on the 4 hour, and if we flip it to the 1 hour, we have the shorter term trendline support. So pretty much identical to euro, really, these 4 hour and 1 hour charts. And notice that we've got that 55 bar moving average coming in there as well. So I mean, euro and cable are trading very, very similar at the minute, very similar patterns indeed. Okay, let's flip to dollar Swiss. Dollar Swiss, let's have a quick look at the weekly. There's nothing much. Well, there kind of is actually of interest here. We have this 55 week moving average here on dollar Swiss. That's the only key focus I'm interested in at the minute. But it has that kind of closed below there. If you zoom in, some people would say it is closed below. So if we do get any pop up, then that could act as resistance. But there's no real patterns here in terms of trend lines or anything like that, or fibs as well. I mean, the fib you could look at would be from that low to the high there, but we're still miles away from that 50% Fibonacci retracement. So nothing massively interesting on that weekly chart, in my opinion. If we flip it to the daily chart, we have now broken below Actually, no, it depends. If you draw it from the real lows here, then yeah, that's much clearer. That if you draw it from the low, I mean, because sometimes you can bring a trend line in, sometimes you can play it from the lows. If you play it from the actual spike lows, then you can see that we're actually in an uptrend now, and that's playing out very, very technically indeed. So we're now sitting right on a trend line support here, which would further, I mean, because what we've been speaking about for the last few weeks, or pretty much all year, Euro dollar and dollar Swiss charts have virtually been like a mirror image, and this looks like the case here. I mean, if we flip it to the Euro dollar, did we have a daily? Did we have the trend line resistance? I know it's broken above, isn't it? Okay, so it's not. I mean, in terms of the trend line resistance, it's not really massively mirroring. But anyway, let's keep it focused. We don't need to talk about the correlations. Let's stick it to actually the charts. On this daily chart, key focus here is this trend line support. Is it going to hold? It looks like it is. It's holding very well, especially the last sort of 3 days. We had 3 spike lows already, and the candles are coming back up and sitting above this trend line support. So all that daily candlestick closes above or below. If we do get a daily candlestick close below this trend line support, then key support there will be that one there, which is still a long way off at the 0.89. But it looks like it wants to hold here, which is quite interesting. And if we do get any bounce up, then the key level I'll be looking at there on this daily chart is a 200-day moving average. In terms of the shorter term charts, let's just move that trend line in a bit. In terms of the shorter term charts, on the 4 hour, nothing. I mean, you got the 50. If we do get a bounce up, then we have that 55 bar moving average there to keep an eye on the 4 hour. In terms of the 1 hour, we also have the 55 bar, 55 hour moving average there on the 1 hour. But I mean, in terms of the overall picture, I'd definitely keep an eye out on that daily trend line support on dollar Swiss. Okay, let's have a look at the dollar yen chart. This is the weekly. Nothing massively interesting. We've been speaking about this for many weeks now. It's just really not an interesting chart. Although if you do zoom in, I mean, the only real key significant point is this trend line support here, which is holding. So keep an eye on that. I mean, especially last week's candle. That was a big reversal candle. That kind of like sorry, man. Pardon me. 2 seconds, have a drink. Yeah, we do have a reversal candle on here on this weekly dollar yen, pretty much like a dragonfly doji candle, and that is bouncing off that trend line support. So on the weekly, we'll be looking at this 55-week moving average. If we're going to get any sort of pop towards the upside, then it needs to get above these key moving averages here, and then we got that 100-week moving average there. In terms of the shorter term charts, so the daily chart, I mean, a fib setup from that lows to the highs there, was that off a fib? No, it wasn't. It was just purely that trend line. In terms of the daily, the key focus is still trend line resistance there, which also coincides with that trend line support. So in terms of the trend lines, very, very technical on this daily chart here. We do have the moving averages floating about here in terms of resistance there. If we're going to get continued pop towards the upside, we need to get above this 55-day moving average, and then that trend line resistance does coincide with that 100-day moving average there. So it is quite a technical chart actually. This daily chart is more interesting than the weekly, but I would keep focus on the daily chart. I mean, if you're looking for any sort of more buying opportunities, if you get any sort of retracement, I'll be looking from that fib there on the 4 hour, from those lows to the highs there, that recent dip, and any sort of bounce off this 50% will be the first key support I'd look at. Okay, it's time for the forex. Let's have a look at gold. Gold weekly chart, trendline support is what it's all about. You have to keep that in mind for the sort of longer term perspective. Let's just leave that there. And you can see we're now well above this 55-week moving average, and we are starting to fly up. All year we were saying it was all about the 1567 resistance there, and this was the numerous weekly candlesticks. It pierced it and it failed to close below. and you had to say that the odds were towards the upside unless we had a weekly candlestick close below, and we're now ripping towards the upside. So in terms of, throughout the week, what to look at, let's have a flip to the shorter term time frames. How would you play it? We're miles away from the moving averages now, especially last week with the US printing more cash, actually weaken that dollar, so we really are in some aggressive moves on gold, and you can see the trendline resistance, which was capping, we've now broken above that, so it literally is ripping towards the upside. In terms of resistance zones, the first resistance up here, the one that I'd keep an eye out on, can you see it on the daily? Yes, you can. And the sort of 1790s level, keep an eye on that. If we do pop towards it, we'll continue to rip towards the upside. That's 1790s, but similar to sort of to euro and cable. Look at how many bullish candlesticks we've had in a row. 1, 2, 3, 4. You have to say the odds, in terms of the weekly candlestick patterns, would be for some sort of retracement, some sort of pullback, especially over the next sort of few days. It doesn't have to. It can just do a slight pullback and then continue to rip towards the upside. But if we do get any sort of pullback, on the weekly, the fib I'll be looking at will be from these lows to highs here, but we're still a long way away from that. So, in terms of gold, there's nothing massively interesting in terms of unless you're currently long and in a long swing long position. But on the weekly, if we do get any sell-off, then you can see that 50% does coincide with the previous support here. Then we have that 200 day moving average just below that. If you are looking to get in on this pair, then similar to euro and cable, you can get and draw the trendline support there, which does coincide with the 55 bar moving average. Or if you're very aggressive and want to jump in on the bandwagon, then there'll be a lot of this is the 1 hour chart. Be a lot of players just playing the short-term dips. So on the 1 hour, you've got a clear spike low there, and you draw that fib from the lows to the highs. And then you could look for some sort of bounce around here on the 50% Fibonacci retracement, or even off the moving averages on the 1 hour. You've got the 55 and the 100 around there. Okay, then that's all for the charts. Let's have a look at the Forex calendar. What do we have? Nothing much coming out today. No high-impact news. Tomorrow we have some UK CPI out at 9:30. We have German ZEW economic sentiment out at 10 AM. We have the UK the BOE inflation letter. That's tentative, no specific time on that. On Wednesday we have some Japanese data overnight with the monetary policy statement and the overnight call rate, and that similar time comes out the BOJ press conference, the Bank of Japan press conference. At 9:30 AM. At the UK with the MPC meeting minutes. At 1:30 we have US building permits, and at 3 o'clock we have US existing home sales forecast at 4.58 million, which is above from the previous. On Thursday, a lot of high impact news here. We have German flash manufacturing PMI out at 8:30. We have UK retail sales, interesting number there, forecasted at minus 0.4% from the previous 0.3%, so it's a much worse number there. And a very big bit of data. There's no specific time when it comes out. We have a Spanish 10-year bond auction, so keep an eye on that. At 1:30 UK time, with the US weekly unemployment claims forecast at 373,000 from the previous 382,000, so we're expecting a worse. We're expecting a better number there, sorry. And out more data out of the US at 3 PM, the Philly Fed Manufacturing Index forecast at minus 4.1. And at 5 PM to end the day, speaking later than usual, is ECB President Draghi, so keep an eye on that. Is he going to hint at any more bond buying, or do you give any idea on inflation and interest rates? On Friday too, a very quiet day on Friday. The main bit of data is out of the UK, with the UK public sector net borrowing forecast at 13 billion, previous minus 1.8 billion, so expect a much bigger increase in that number. Okay, that's all for today. I hope you enjoyed that video. I hope you enjoyed the charts. Have a great week trading, and I'll catch you next week. Take care.